Not every move with direction is a clean trend. That sounds simple, but it is one of the most common chart reading mistakes. A market can push upward and still be messy. It can slope downward and still be full of overlap, failed follow-through, and sudden reversals. If you treat every directional push like a clean trend, your indicators can start to feel confusing. The trend tool says one thing, momentum says another. Price keeps moving, but the structure does not feel reliable. So in this video, we are going to separate two ideas, direction and trend structure. They are related, but they are not the same thing. A clean trend is not just a chart that points up or down. A cleaner trend usually has three ingredients: direction, rhythm, and follow-through. Direction means the market is making progress in one broad direction. Rhythm means pullbacks and pauses are easier to understand. They do not instantly destroy the whole structure. Follow-through means the market is able to continue after those pauses. When these three pieces are present together, the chart can feel more organized. The movement has structure, not just slope. Chop is different. Chop often has overlap. Price pushes in one direction, then gives back a large part of the move. Candles expand and then stall. Momentum appears, then disappears. The chart may still drift upward or downward, but the movement is messy. That is why chop can be frustrating. It can look like a trend from far away, but when you zoom into the structure, the follow-through is weak and the pullbacks are hard to organize. In a choppy environment, the question is not only which way is price moving. The better question is, how clean is the movement? Slope can trick the eye. If a chart is leaning upward, it is easy to call it bullish. If it is leaning downward, it is easy to call it bearish. But slope by itself does not tell you whether the path is clean. A market can rise with repeated failed pushes. It can fall with deep snapbacks. It can look directional while still creating a difficult review environment. This is where many traders add more indicators. But the missing piece may not be another indicator. The missing piece may be a clearer definition of trend quality. A practical trend review can start with three questions. First, is there direction? Is price making broad progress? Or is it only moving back and forth inside a range? Second, is there rhythm? Do pullbacks make sense, or do they immediately erase the move? Third, is there follow-through? When the market pushes, does it continue with structure, or does it keep stalling? Direction tells you where price is trying to go. Rhythm tells you whether the path is organized. Follow-through tells you whether the market is actually accepting that direction. Those three questions are much stronger than asking, is the line pointing up? On a historical chart, compare two areas. In the first area, the market moves with cleaner structure. There is direction. The pauses are easier to read. The next push has some follow-through. In the second area, the chart may still move in one broad direction, but the structure is messier. There is more overlap. The pushes stall more often. Pullbacks give back more of the move. Both areas can have direction, but they do not have the same trend quality. That is the distinction. Clean trend structure is not just about where price moved. It is about how price moved. The common mistake is chasing slope instead of reviewing structure. A chart starts leaning upward, so the trader assumes the market is trending. Or a chart starts leaning downward, so every bounce looks like a continuation opportunity. But if the market keeps overlapping, rejecting movement, and failing to follow through, the structure is sending a different message. This does not mean the market cannot continue. It means the chart deserves a different kind of review. Trend tools are most useful when you understand what question they are answering. Are they showing direction? Are they helping you read structure? Or are they being asked to solve every part of the chart at once? This is where a layered workflow can help. Sigmalith Regime Detector helps organize the broader market environment. Is the chart showing cleaner directional behavior, sideways behavior, or a more mixed regime? Then Trend Day Radar helps organize session trend context as the day develops. Together, they can support a cleaner review of trend versus chop, not as trade instructions, not as guaranteed predictions, and not as a replacement for your own plan. Think of them as context layers. Regime first, session trend, context next. Then review the actual price structure. A simple trend versus chop workflow can look like this. First, check the regime. What kind of environment is the chart showing? Second, check the session trend context. Is the day developing with directional pressure, or is it becoming mixed? Third, check structure. Is there direction, rhythm, and follow-through? Fourth, check momentum or volatility only after the structure is clear. This order matters. Momentum inside a clean trend is not the same as momentum inside chop. A sloping line in a clean trend is not the same as a sloping line in a messy range. The goal is not to predict perfectly. The goal is to stop reading every directional move as if it is the same kind of market. The main takeaway is simple. Directional does not always mean trending. Before calling a chart a trend, review direction, rhythm, and follow through. If trend versus chop is the part of your workflow that feels unclear, compare Sigmalith Regime Detector and Trend Day Radar at sigmalith.com. Sigmalith indicators are available for NinjaTrader 8 and TradingView, with supported setup paths for purchased indicators. Use them as technical analysis and decision support tools, not as trading advice or guaranteed signals. The goal is a cleaner chart review. Regime first. Trend context next. Structure before excitement. Thanks for watching. Software education only. No trading advice or guaranteed results.